following is an update and technical analysis on the equity markets, the US dollar, and commencing with an analysis of the 2-year Treasury Yield taking a hawkish impact within the short-term rate expectations, causing a significant fluctuation within the Treasuries this week. Interestingly, the long end of the curve, notably here within the 2-year, you've seen a rapid rise, surpassing the 5% mark once again, where the dollar concluded with a week with a slight increase, recovering and retracing all of the losses from Wednesday, and a remarkable turn of events where I believe we see witness to the plunge protection team swiftly intervening, acting like a white horse by pressing the buy button shortly after Powell indicated a prolonged period of higher rates within his speech. With closing words, we are flying near the stars under cloudy skies, just adding an intriguing finish to the entire address there in Jackson Hole. And here we are, trading within the realm on a complete sell-off here in the short end of the curve, with the 2-year yield testing this 5 minor price resistance, call it minor resistance off this key inflection point, multi-year key inflection point, whereas short sellers are just completely potentially on the course of piling in here if they see a solid daily candle close up above this key inflection point, in my opinion, adding further pressures on the short end yield of the curve and what would look on a series of events on a more harsher sell-off here within that Treasury yield curve. As far as move for complete bidding, bull traders, long bond traders of the 2-year want to see a complete rejection of this inflection point on a potential rechallenging of this off the early stages of the June lows there, and that I would call a minor reactionary uptrend line, which coincides with this 50 exponential moving average, just synchronizing with this primary reactionary uptrend line, but down below. Whereas we do have a bearish crossover here on the Stochastics 1033 on a slight tilt to move to the downside, with still containing a fluidity of a high series of momentum that could alter its course on a move to the upside once that crossover inflection point peak transition phase ends up piling in, could avert and move to the upside in a prolonged move. For a much larger sell-off here off the short end of the curve, where you have the moving average convergence on a bullish crossover and trying desperately to churn to the upside, which would again spell further pressure on a mean bond market sell-off, which I would believe put higher pressures within some of the U.S. tech space. Taking you out to the U.S. dollar index features here off the 240-minute interval, a lot more zoomed in here, where I do see some sort of a significant pivot transitioning points where we have a divergent high, still complete divergent high with negative and bearish divergences really constructed amongst all 3 key technical momentum indicators at a inflection point off this 104.10 price support, and we've popped that level. We've held that level now, which will come on a retest of the currency market open. And additionally, we have this primary reactionary uptrend line off the mid-July reactionary lows, and that is significant price support with the 50, 240-minute moving average synchronized closely to that major price support level there. Dollar bulls, long bull traders, long dollar bull traders, they want to step in immediately off of a retest off that key inflection point to sustain this much larger rally to the upside, whereas you have the 104.53 price resistance hovering in up above, and again, call that close to multi-year primary reactionary price resistance, and I would only suspect some sort of reaction, if not a prolonged move on a rechallenging. And if we pop that level, these divergences will begin to ease off and burn off, honing in on a much more stronger, I believe, move to the upside if and when we come across that junction. Complete revisit, if not a puncturing right back up, and a complete reclaim of this 104 price support, defend that level on a prolonged move up to the 104.53 price resistance, and then ultimately taking that out for any bull traders, long traders of the bull, long traders of the dollar bull there. And what is more significant within the technical momentum indicator space is if we go on to retest this primary uptrend line major price support level, you're going to have a moving average convergence retesting its 0-line threshold as well, and which has been heavily defended within the relative strength index and the oscillator, price percent oscillator there as well. But the moving average convergence has just been a monumental key inflection point of support that I believe, again, would be a strong level of support, not only within the technical momentum indicator space, but additionally price action in the buyer and seller data off this technical realm. And again, equity bulls want to see a breakdown of the dollar with a solid daily candle close, if not 4-hour close, below that key inflection point on a potential backtest, retest on a split sell signal here, and then again just infusing a prolonged rally in the equity markets for a much larger rally to rechallenge some of those resistance levels that have been previously rejected. Taking you out to the US 500 futures here off the daily interval, we have this primary reactionary uptrend line that I had just stressed and continue to hype up within that previous video, and we were defended impulsively right off that key inflection point, especially if you're an active and or day trader, right back up to that key resistance off that 44, call it 44.30, 44.20, and that was good for, call it a 1.3% bounce in a single day there. And it looks like we just slightly got rejected, just coming in, within a centimeter shy of tagging it there. And that on a move to the downside was good for 0.4%. And because it was defended a secondary time off that key inflection point, that further validates the strength now of this primary reactionary uptrend line, call it a major price support level for bull traders, long traders. Again, setting some stops below where you have the 100-day moving average, and we have the 50% fibs retracement hovering in around this 43.30 range. And again, just a nice level of price support all across the board there, which I believe provided the risk reward arena to the long side, giving the bulls strength and hope in a possible renewed rally that they need to defend really at all costs to re-challenge some of these key inflection points that were rejected upon some of the first big bounce rallies. What's going to really help out the S&P 500 bull case is taking out the 44, 22, 20 price resistance, and additionally the 44, 45, 70 price resistance up above. Just a continuous amount of reactionary highs there, a ton of resistance up above. But taking these additional levels out will confirm a bullish crossover here in the moving average convergence on a nice technical posture buy signal if and when we get that, on a big re-challenging of the 786 fibs retracement. And I believe that is the key inflection point, the near-term big key inflection point to watch. I had continued to stress how imperative this primary reactionary uptrend line was off the January 2023 reactionary lows, and that was defended heavily amongst bull traders and or long traders right amongst that key inflection point, which netted what's good for, especially for an active and or day trader, good for a 2% bounce in a single day move to the upside, where a lot of sellers sold right into that price resistance and just netting you a potential move to the downside right at that 14,974.60 price resistance. And again, that was defended pretty heavily there in the near term right before the closing bell, where bull traders, long traders need to defend now this heavily validated price support, major price support level for a prolonged move to the upside in a re-challenging of the 15,281.60 price resistance. And additionally, the minor reactionary primary downtrend line here right off the space off the mid-July reactionary highs. And then additionally, you have the 50-day moving average hovering in right up above, synchronized with the 15,281 price resistance. So again, just big key levels to watch here and respect. And then additionally, you will put in, if we go to re-challenge and pop this level of this 14,974 price resistance, begin to spur health right back into these key technical momentum indicators with a potential bullish crossover setup. Whereas bear traders, short sellers, they want a rejection right amongst some of these key technical resistance levels, giving you the most valuable price resistance short trade setup amongst that primary resistance, call it a dual line resistance with the 50-day moving average, on a re-challenging, if not potential marginal new high, near-term marginal new high off that primary reactionary downtrend line. And then ultimately they want to take out, which would again offer a nice, clean, objective short trade, full position size with some stops up above, up to that 15,781.90 price resistance. And again, they would want to see a deflection off this key zone and a complete breakdown off this primary reactionary uptrend line, finally putting in a major secondary sell signal on a potential backtest move to re-challenge the undercut of those lows and a prolonged, much larger wave of selling back down to some of these key price support levels. Bull traders, long traders, they want to see a prolonged move to the upside, take out this primary reactionary, solid daily candle close above this primary reactionary downtrend line on a re-challenging amongst these key price resistance levels to go re-challenge all-time highs and potentially break out and above beyond that with no resistance up above. Taking you to the US 2000 Russell futures here off the daily interval, not a whole lot of change, except we bounced right off again. Additionally, the 236 fibs retracement, especially again, if you're an active and or day trader, that entire move for that space in a single day netted you 2% in gains on a big move to the upside, where there's a much larger beta and volatility price action movement within the Nasdaq and Russell 2000. I've added a new key additional primary benefit of a doubt reactionary minor uptrend line here. If that reactionary low was validated, then we have an additional, again, price support level that I would like to see taken out. Corresponding with the 18, 19, 10 big price resistance, call it multi-year price support there. And bull traders, long traders, again, I have been stressing enough how badly they want to see a final breakdown below that key inflection point on a prolonged big move, a wave of selling down to the 1726 price support, where additionally you could potentially net out to see a potential bear flag continuation pattern, big move to this downside, snapping a ton of stops to go off, and a pure washout of leverage, where bull traders, long traders want to see a potential reactionary low where bulls are in full control into the Friday's close, and they want to see a deflection, reaction, and potentially a rebalancing recovery retracement level right back above this first initial primary reactionary uptrend line, and a re-challenging of the 18.9930 price resistance. And again, I continue to hype and harp up how big these key inflection point of price support and resistance levels are, with just a huge wave of reactionary highs and lows right across the entire spectrum there.